The following is a presentation of TFNN, The Trader's Edge, with your host, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the June 25th terrific Tuesday edition of today's Opening Bell on The Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today, folks. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that truly is what it's all about. So let's go look at one of our tools. This is the tool I call There Is No Limit to Your Potential. Perhaps said another way, there are more possibilities for each of us than any of us can imagine. So let me ask you this first question. Is that your belief system? That just simply the world is full of unlimited possibilities and that there is no limit to your potential? It's mine. It's mine for sure. But think about the difficulties that we must overcome in order to believe that there is no limit to our potential. You know, from the time that we're born, we're taught to think in terms of limitations, boundaries or restrictions. Fences simply surround most of our property. Speed limits, they slow us down. In fact, some believe that our endurance is limited. Of course, we know that none of that is true. Every 4 years at the Olympics, maybe it's every 2 years because we've got the Summer and the Winter Olympics, we see records shattered each and every year. There's no reason why you can't shatter your own records out there. Now, here's the trick. And this next sentence, folks, you might want to actually write it down. Life is consciousness. And what I mean by this is that if we are conscious of our limitations in our life, then so it will be for us. You know, Albert Einstein, he once wrote the most beautiful and the most profound emotions we can experience is the sensation of the mystical. For me, that means that our minds are filled with ideas and thoughts, folks, that show us how to build or create the things that our imagination can only conceive. There is no limit to our potential. Let's just simply go out and create an extraordinary life. And let's begin by doing that today. Let's go check out the extraordinary life of these markets here. Right now, there's not been a day that I can recall a morning where we haven't had the futures either up 100 points or down 100 points. Well, they're not exactly up 100. You've got the Dow futures up 91 right now, trading out at 14,679. The ES Mini trading out at 1578. That's up almost 12 points, 11.5 points. The NQ, the NASDAQ futures up 0.7%, up 21 points. Russell 2000 up 5 as well. King Dollar up 15 ticks right now, trading out at 82.78. We've got the euro pulling back about 24 ticks. Gold, not really a lot of movement out in gold. It's up $4, trading at 12.81. Silver's up 16 pennies out at 19.65. Light sweet crude, well, that's got a mind of its own. It's up at 95.73, up about 0.5% this morning. As we take a quick peek around the globe, see what we have going on out here. And quite a market over in Asia last night. So we're going to start off, actually, and we'll go take a look at that market. Right now, the DAX over in Germany, that's up 126 points. That's up 1 0.6%. The FTSE having a nice morning as well. That's up $68. That's up a little over 1% here. Over in Asia, the Nikkei was down 93 points last night, off 0.7%. The Hang Seng, we're certainly going to take a look at that. Ended up 41 points. It was a wild ride out there. The Shanghai as well, down about 4 points. Our call-in number is 877-927-6648. Give us a call. We can take a look at your stock, your commodity, your equity, whatever it is that you have. So let's go take a look at these markets. I said we should start off. Let's go start off by taking a look at what went on over the pond. We're going to talk about the Pacific pond out here by starting off in Asia. We're going to start here with the Shanghai. Now, there, folks, is a hammer candle. If you are just listening in on your radio or your mobile device at TFNN.mobi, thank you so much for doing that. Remember, you can always catch the live stream of this show, which means you'll go ahead, you'll see our charts on your screen, on your mobile device, by just simply going to the homepage of TFNN.com. Over on the right-hand side, you'll see a button which got 3 little smartphones in the upper right-hand area. Click on that. The show will stream live to you. Of course, you can always catch the archive of this show on Channel 9. If you were watching us on TigerTV right now, what you would see is a big hammer candle that was formed yesterday. Now, if you take a look here last night, early this morning, I should say, if we take a look at the Shanghai, it traveled all the way down to 1935.59. We're going to together go see where that was headed to. Originally, I was taking a look at a fairly long-term pattern here, 0.786 Gartley buy pattern right out here that would have completed right around the 2143 level. That was coming off of the swing point from December 4th out there. You can see it had some nice, maybe you can't see it if you're not watching us, but it had some very nice Fibonacci retracement and expansion numbers. It was a 0.786 retracement. That means from the low of December 4th all the way up to the high that was put in on February 18th. That's just math. It means it was a 78.6 retracement. One of our Fibonacci numbers. That gave us a price projection of 2143. It was an A to B equals CD down. It was also a 2.618 expansion. But as we can see here, as that area was being hit, there were no bullish candles. Even though you can take a look at the candle session here on June 21st, even though it's green, that just means that it closed above where it opened. That does not mean that it is a bullish candle. In fact, just the opposite. It was bearish because you were below the prior session out here, and then while whoosh, whoosh, I should say, that's when the market moved down lower yesterday, June 24th out there, and then, or the day before, and then last night here really moved down. Now, it's probably an expansion. Wouldn't you say it's a Fibonacci expansion? So let's actually go take a look at this here. We're going to go from that low, and you've got a ruler on your charting package, I'm sure, and if you go from the low to the high, you want to make sure that the increments that you're looking at, 1.272, 1.618, we'll see that 1.272 would have given us a price projection of about 1912. The actual low that came in yesterday, 1935. Pretty close for the type of government work that we do around here. And then the bulls came rushing in out here. So very strong support now inside the Shanghai. That's going to be down at the low of yesterday, which is 1935.59. Big hammer candle. If that hammer gets taken out, and I suspect that it will, when that hammer candle gets taken out, if you are long, you are wrong. Take a look at this stock chart here. This going all the way back into the 2007 time frame. Right now, our S&P closed inside the October 2007 swing point high. If you go take a look at the Shanghai, you think that there are problems in River City. It's not even close. It's high back in 2007, somewhere around the 6,400 area. Again, it closed even with the hammer candle just around 2,000 out there. If we put this on a weekly chart, let's put this on a weekly chart, see what we have going on out here. In the weekly chart right now, it's actually traveling below the swing point that takes you back into 2009, March 6th of 2009. How's that for some data out there? The March 6, 2009 swing point low, 2138. And as I said last night, it closed to let's see, the the Shanghai closed at 2050 out there. Let's go peek in as long as we're in this tab here. Let's go peek in and see what the other markets are doing around the world here. The FTSE, which is just simply an awful-looking chart from the mere fact that it's just of roller coaster rides. This is a straight move down. Of course, it took out a hammer candle from June 13th. Right now today, really just an inside day, even though it's having a nice morning, up 72 points, up 1 2/10%. Let's really put things in perspective out here. Just having an inside day. The top of yesterday's candle was 61.36. The low out there at 60.23. So really just kind of an inside day, working off an oversold condition. We know that it's oversold just simply by taking a look at that relative strength index yesterday, really pushing down below the 0.618 retracement, which was 60.90. The FTSE is eventually going to make its way back, most certainly, to the November lows, November 19th, November 16th, right around the 5,060-ish type level out here. Let's go see what they're doing over in Germany here, how they're celebrating June 25th. That has been a strong, now the DAX here has really represented more of our markets here. It looks almost more like the Dow chart. If we take a look at the DAX, yesterday it made its way all the way down to the 0.786 retracement. The actual low that it got to was 76.55. Now, when I say 0.786 retracement, I'm going from the low that was put in here, the swing point low. That's where we see the market make a change in trend. Whenever you're taking a look at a stock chart, you're looking for those swing points. Those are really going to be our anchor points from highs to lows, lows to highs, in order to be able to measure our retracements out there and also be able to measure what's really happening from a supply and demand, whether or not it's going to be able to bust out swing points. In this case here, the DAX did not get down to the swing point low. The swing point low from April the 19th was 74.18. The high was 75.31. It did not get down and touch that level. But if you go from the low, 74.18, all the way to the high that was put in here on May 22nd, just like our markets, May 22nd, we'll see it did a 0.786 retracement. Having a nice morning out here. All that it's doing is bouncing. Where is it that the DAX could bounce to? Well, if we go from that May 22nd high all the way down to yesterday's low, the 0.382 retracement, just a dead cat bounce, just a way to be able to work off that oversold condition, could easily take it to about the 8,000 level out there. That would be a nice move for sure, because you're trading right now at 78.29, so it would be maybe about another 180 points or so out there, but not so fast. All it's doing is really setting up the next move down. It's just creating the B to C point of a larger A to B equals CD down. Let's go take a look at our index futures as well. Let's switch over to our markets. Let's go take a look at the S&P 500. As we take a look at the S&P 500, what it did yesterday was it completed a 1-to-1 A to B equals CD. Down. That was coming off of your May 22nd high out there. That level 1685.75. That was your A point. Your B point was down on June the 6th. That price point 1596. Your C point was that retracement into really last Tuesday. Quite frankly, at about 2 or 3 o'clock in the afternoon. Wednesday it got just a tad higher in the futures, but we can see the 1-to-1 A to B equals CD down was formed. It's got lower to go, but not until we work off a little bit of this oversold condition out there. 877-927-6648. We'll be right back, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Absolutely is, folks. Welcome back. Right now, Dow Futures up 120 points. There we go. Now we got our 100-point swing in. You got the ES Mini up 16, trading at 1582. So let's go take a look at the shorter-term charts out here, see what it is that we are doing as this oversold condition, as this little bounce that we have in the marketplace. No marketplace that starts trading in 250, 260, 300-point increments out here. You got to really kind of keep things in perspective. I think you should keep things in perspective. Let's switch over to the 30-minute chart out here. You know, last night, and my condolences to all of you Boston Bruins fans out there, was quite a hockey game in the Game 6 out there, and it looked like the Bruins actually had the game that looked like they were going to be moving to Game 7, which I certainly was hoping for, and they fought so hard, and then at the last minute, just really contusions, brain contusions everywhere. The Chicago Blackhawks, I mean, they believed in their unlimited potential out there, and they wrapped the game up in about a 1-minute time frame by scoring 2 goals out there. So looked like we were going to have an overtime goal, an overtime game out there at least, and Chicago Blackhawks said no way. So now what we're taking a look at, and what I was watching as I got back from watching the game out here, right at about 11:30 last night. We're looking at a 30-minute chart if you're watching us on Tiger TV. I thought it was all of the Bruins fans that just simply decided to sell the ES Mini because it was one big, wide, swooshing bar to the downside. This went from a high of 1569 down to about 1562, so about 7 points here, and usually a time frame when it's relatively quiet out there. But it was one big swoosh to the downside. If we take a look at the retracement here last night, and we go from the low that was put in at about the time frame of 12:30 down to the high that was put in as we were coming into the 3 o'clock time frame. What you'll see is the 0.786 retracement would have given you a price projection of 1559, and there was a hammer candle that actually formed, and that low was 1558 and a quarter. So real decent support out here right now. That actually set up the C point of an A to B equals CD down. So as I go ahead and I pull this stock chart back here, what we can see that's really unfolding here right now is the completion of at least the 1-to-1 A to B equals CD. Now, you're coming into that D point with a wide-ranging bar. That wide-ranging bar takes you up to 1585. I see a question, should I jump on board and take a long position? And the answer is absolutely not. No, you would try to take a long position here. You'd be taking a look at the futures contract. You maybe would come in if you were up. You take a look at a retracement of an area, not here where it's trying to complete an A to B equals CD. Now, when you come into a swing point like this here, where you're completing the D point, if in fact, and that D point would finish right around the 1585 level. So I suspect we're going to see that, and then you need to see how the market really responds there. Do we see a pullback? And if you're coming into this wide-ranging bar, which we are, but we're not really there just yet because we're trading at, 1581. And so we'll see what happens here. We've got 3 minutes into this session. So it's really going to be that next candle session from 9:30 to 10. That's going to let us know whether it's going to be a 1-to-1 or whether it's going to be a 1 to some type of Fibonacci expansion of that level. What are the different numbers out here? Let me just try to put those on our screen out here. 1 to 1.272 would take you up into about the 1592 level. But what you want to do is you want to buy retracements. You want to buy retracements. You know your retracements on any, or whether you're buying or selling, you want to either buy or sell retracements. And what you're really looking for are the signals where you can just simply draft, just like a car race. And a hammer candle, that's a beautiful to the long side. That's a beautiful place to draft because you know that you can have your stop just underneath the low out there. Take a look at this. You know, we talk about these retracement levels. You don't have to trade the futures, but you should at least use these as your triptych, as your guide map to where the markets are going and to be able to assist you and help you in being able to identify where it is that you should be putting your stops. You get a close below that hammer candle out there. That price point here is 15, what did I say? It's 15.5825, and we'll get there. And so know that to the short side, when you break that area out, you know if you're long, that you are wrong out here. So at least the ES Mini wants to get up into that 1584 level. We'll see if at that stage it's going to continue to work its way off. But remember, when we were taking a look at the charts here around the globe, as we take a look, not the DAX, because that really isn't finished here, but as we take a look at what went on over in Asia last night, we had even the Shanghai. Well, that's the weekly that I've got. We were talking about the Shanghai, but that finished with a hammer candle. That finished up at its session highs out there. So that's a clue with regard to where today's market ought to finish. We'll see if, in fact, it does. If we take a look at the Shanghai, or the Hang Seng out here, not truly at its session highs, but close to its session highs out here. I suspect while this market works off its oversold condition, that we'll see it close up towards a session high, maybe today and tomorrow. And that means that your selling opportunity could come in maybe the end of tomorrow. Maybe it's going to be Thursday. 877-927-6648. I'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. The Art of Timing the Trade charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The art of timing the trade charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
To the races. We got the Dow up 102 points. Trade up 14,760. S&P 500 up 15 at 1587. Remember that number, 1576.09. The S&P back over that. There's going to be some moving back and forth into that October swing point from 2007. Composite trading up $32 at 33.52. No, this is not a rejection of that swing point, and the markets are going to move higher. The markets are going to move lower. You should consider this a gift for all of you that are long out there. You want to make sure that you've got some. This is a gift here for you. Look, I can't control the markets. I don't control the markets out here. But what I can control, or what you should control, is really trying to protect your profits. So if you've ridden this first leg down from May 22nd through yesterday, I would take a look at today as truly being a gift out there, and I would adjust my stops. We are in a market where the trend has changed. The trend is your friend. It's a special report that I put together. It's available to you on the homepage of TFNN.com. You absolutely need to make that a must. Go to the homepage, download that report. It'll take you all of about 30, 45 seconds out there. And then if you'd like some additional education, there's a link inside there as well as on the homepage of TFNN.com to test drive my newsletter service. Absolutely free, 2 weeks, no credit card being charged, anything like that. So you've got really two great options out here. But this is a market where selling the rallies. Now, is it today's rally that we sell out here? We need to wait, really, and wait for the pattern to complete out here. And this may be a rally to sell. I think we've got, over the course of the day, I think we will see a bit of a higher move out here. But if we don't, what's really cool about then today is that this is really helping us to understand that the 1580-ish area is going to be a very, very strong area of resistance. Now, what the ES Mini was doing as we were coming into that 9:30 session, it broke above a level of resistance, which was set up by this evening star, this three candle formation out here, which was formed by this nice wide-ranging bar that came in at 2:30 in the afternoon yesterday. You then had a little bit more of an upthrust here, but the body of this candle still being maintained with inside the body of the prior session at 2:30. Again, it's a 30-minute chart that we are looking at. And then you had a close on that following candle at 15:30 at 2:30 in the afternoon that was halfway into the green bar that you were looking at, that upthrust bar. That set up your Three River Evening Star. We saw the close as we took a look at the 9:30 session above that level. That says that this area here should be support. So we're going to watch how the ES Mini over the course of this next half hour, and most certainly we'll be able to take a look at it as we come into the 10 o'clock hour when we open up the Money Masters show out here. But this, even though we're seeing a little bit of a push lower, all that it's doing is just testing. And that's all that the market really does. And that's why you want to understand your candle signals out here, because you want to be able to identify areas of support and resistance, because that's really what the market is all about. It's about a little battle. It's like playing Battleship out there or Stratego or whatever the game it is that you used to like to play. And it's really nothing more than just watching your forces, watching your army, your military, whatever it is, watching them either defend positions, and if they defend positions and hold it, that tells you you've got good areas of support. If they defend positions and they fail, then you're taking a look at resistance areas and so forth. So what we want to do out here right now is see if, in fact, we can get a close above this area of resistance. Where is the next area of resistance inside the ES Mini? Well, it could be up above, right about here, which is where we saw the big sell-off. This could be where, did we see Uncle Ben? Was this on June 21st? I can't go back that far in my memory bank and see if that was the real big sell-off. No, that wasn't it, because the cascade took place way up here. So there is some addition where we have the 1 to 1.272, A to B equals CD. That would be your next area of resistance in the marketplace. So we'll see how this 9:30 to 10 a.m. session here plays out. Right now, not enough information. Yeah, we're seeing a move lower, a dark cloud cover candle, but it's a 30-minute chart. And so you don't know what the actual candle is until the 30 minutes finishes its session out here, and that does not occur obviously until about another looks like 22 minutes. But let's go take a look at some of the stocks here that are actually popping and dropping. Yesterday we had Google. I don't know if Google actually totally led to the downside. They were one of the leaders early on in the morning session. Right now you've got Google as the leader to the upside at $5. Now I believe Google was coming into its hammer candle. So if you give me just a moment here, I'll find which is probably underneath this tab here, show charts. So we're going to go take a look at Google and see what it is doing. As soon as I get my cursor control here. There we go. Come on over here. And we get to this. GOOG, by the way, is the ticker symbol in case you didn't have it. So where is it? Google, G-O. There we go, in the upper left-hand corner. So let's take a look at Google. Now, the hammer candle is what it actually tested yesterday. It rejected the top of that hammer candle. And that is the session from June the 6th out there. So that was June 6th, which was an important low. Now, to give a perspective of how strong Google is versus just the general market has crushed through the June 6th area. The S&P crushed through June 6th with accelerated volume. The Dow Diamonds crushed through it with accelerated volume. We'll go take a look at the Qs and actually see in the NDX 100, see if they actually made their way through the June 6th level, just so you can kind of put in perspective strength and weakness. Inside Google, we were identifying, or the market itself Google was identifying for us where the strength was, because they put in that hammer candle on June the 6th as it had only made a 0.382 retracement. Now, when you only make a 0.382 retracement, folks, now that's the first place where you're going to get off of an elevator. We're going to see if what's really taking place is an A to B equals CD down, or if Google's going to be one of these stocks as the market continues to move lower, which it will. It's going to move lower here for the next, in my opinion, for the next couple of months. We're going to see some nice bounces, but we're also going to see some real nice big flush outs to the downside out here. So we take a look at Google, yesterday's hammer candle, June 6th hammer candle had 2.6 million shares, 2.579 million shares out there, and yesterday coming into it with 3 million shares. Now, that's not a good sign, because that's telling you it's pushing into a swing point with volume. What that does say to me is that says that the low of that hammer candle will get tested. And inside Google, you close below a hammer. If you're long, you're wrong. Inside Google, that would be setting up more than an A to B equals CD down, because if we take a look at the left-hand side of the chart out here, we do not see any additional support. There's no troops out there until you get back all the way down to the April 18th level. And inside Google, that price is 761. Google right now is trading out at 870, so it's over 100 points to the downside. Should that hammer candle get taken out. But very key information both yesterday as well as today, because today what we want to see is what kind of bounce is there, what kind of energy, assuming that there is energy in the marketplace, what kind of bounce is there in Google? Is this just really setting up a series of A to B equals CD down patterns? You know, we'll know by the end of the 4 o'clock session for sure. Right now, 219,000 shares during the first 12 minutes of trading out here. But yesterday, the key is the hammer held, which it should have, but you were pushing into the swing point with volume. Now, that was June 9th. So let's actually go take a look at the NDX 100 out here. If I can pull that up on my screen here, daily indexes. So let's pull up the NDX 100 and let's see what the NDX 100 actually did here yesterday and see where it is, where it closed yesterday in comparison to that June 9th candle, just as a reference for how strong or weak Google is. Well, June 9th is all the way up here. June 9th is the low of June 9th is 29.11. Right now you're clear. You're trading out. Let me see what the index. It's easier for me to just look over here. So just give me a moment. In the NDX 100, Google, the NDX is trading at 28.80. So 28.80, and it broke out the June 9th low. That low was 29.11. You can see how strong in with regard to the weighting structure, just how important to the NDX 100 Google is, as well as Apple. We'll go take a look at Apple as well. Now, what the NDX did yesterday was it created just a little bit below a 0.618 Gartley buy pattern, but the candle that it formed yesterday, really just more of a spinning top high wave candle, which means the high wave candle means it was losing its way to the downside. So not unusual to be able to see a bounce, and you're going to see a number of this market's going to be a trader's paradise, which means you want to be really paying attention to swing points, and in my opinion, you really want to be paying attention to the futures contracts. They offer you great opportunities because if you're waking up in the morning and all you have are gap ups and gaps down, just think of everything that you are leaving on the table. If we do take a look at the NDX 100, as long as we are out here and we take a look at that, it was a 70%, so it wasn't 0.786, it wasn't 0.618, it was kind of mid-stroke out here. If we take a look at the dead cat bounce of this retracement and come off of the May 22nd high to the low that was put in yesterday, the dead cat bounce would take you up into about the 29.12 level. So it's still a pretty decent move out here, 28.78. That's why I say I really think that our next shorting opportunity may be tomorrow, may be Thursday sometime out here, because I don't think we're going to see that type of explosive move today inside the NDX. But you know, we take things one thing at a time. Let's go back now and let's take a look at Apple and see what Apple was actually doing yesterday. So we've taken a look at Google. We see how strong Google is. We know that Apple is not anywhere near the strength in the marketplace as Priceline, for example, inside the NDX or Google is. But as we take a look at Apple, yesterday Apple was pushing down. Let's see what kind of volume we had inside Apple out here. Give me a moment. Apple pushing into didn't get all the way down to this. Well, maybe it did. The swing point low right now, the present swing point low, is going to be Apple from April the 19th. And the high out there, 399.60. The volume inside that swing point, about 22 million shares. Yesterday's push down was 17 million shares. So we took a look at Apple yesterday and took a look at this volume, I believe. The low here yesterday, 398.05, going into a high of 385.10, so it didn't quite get down into that level, but it was pushing on that string. Now, you had accelerating volume. Certainly, if you take a look at the bottom of my stock chart out here, you can see that volume was accelerating to the downside, but still not enough to be able to take out that swing point. It will. Apple will take out that swing point, and what you're really taking a look at is what is the next bounce here in Apple going to be. In fact, if we take a look at A to B equals CD down patterns here, your A point in Apple is May 7th. That's your A point. Your B point is all the way down to the low on May 16th, and the retracement C level May 31st. You can see what Apple did yesterday was completed an exact 1 to 1.272 A to B equals CD. But look how weak Apple is. The market right now, you've got the Dow is up 109. We were taking a look at the NDX. That's up 30 points. That's up. In fact, that is the leader in the clubhouse, other than the Philadelphia semiconductor sector out here. So you got the Nasdaq 100 is the leader. New York Stock Exchange up is really drafting the Nasdaq. and take a look at Apple. It's actually trading at its session low right now. That's how weak Apple is out here, and certainly that is a heavy weighting inside the NDX 100. So Apple is really setting up, in my opinion, to take out its lows out here. We saw volume accelerating as it was moving down there, but still not enough to really bust it out. And all it needs is a market here that recharges for the next day or so in order to be able to bust out those lows. So that's in Apple. Now let's go take a look at some of the things here that are popping and dropping. You've got LinkedIn. Let's go take a look at LinkedIn. LNKD is the ticker symbol. Now that had an island reversal. I can't recall, maybe you recall, whether or not the ship went out there and rescued all those passengers. LNKD. No, it did not. Let me just refresh the chart here, make sure we've got all of the active data. So it's got that island reversal. Now, this is a great performing stock out here. And what's actually kind of nice about this as we take a look at its retracement. Now, first, let me point out the island reversal to you. That's this trading session right here from May 2nd out there. May 2nd. It gaps up from the prior session. The prior session high inside LinkedIn was 195.50. If you take a look at the low from the very next session, the May 2nd date, 196.43. So it creates a little bit of a gap up there. And that's a good thing. That was a positive thing. The negative thing was the mere fact that in the following trading session, it gapped down. And it gapped down with volume. So that's volume off of the top with an island reversal, a very negative pattern out here inside LinkedIn. And you can see it attempted to get back up here on the trading session of May 15th, but it was doing it with 3.8 million shares. Of course, all that was doing was really going against the resistance area of the real breakdown, that gap down on May 3rd with 11 million shares. In fact, what you should do, what I would do if you were charting this out here, I'm going to go ahead and clean this up just in fact, I'm just going to clean that up here. Let me just delete that. What I would do if I were you can see a very clear line of resistance just simply by going to the area where it broke down. And now I'm not really suggesting this is a shorting opportunity, and let me explain why in a moment. But you can see where the resistance line is in your game of Battleship Stratego. What's the other game out there that I used to play as a kid? Risk. The game of Risk out there. And, hey, what a perfect game. How about that? So as a kid, I used to play the game of Risk, and now I do it each day, including the weekends out here. If we take a look at where the battlefield is inside LinkedIn, all you have to do is go to the high of that downdraft session on May 3rd. That top is 187.15, and you can see that area has acted as resistance. It's been tested twice here, so we know where the bears are truly hanging out. Now, where are the bulls hanging out? It's possible that where the bulls are hanging out is really right down here at the February 8th level. And at February 8th level is where we saw a nice sign of strength inside LinkedIn. And that sign of strength out here had 13 million shares. So even though we had volume off of the top, it really wasn't enough to totally destroy and break down the stock. You'd like to see a nice pullback coming into the September timeframe of this year and watch LinkedIn come back into maybe the 140 level. Maybe it really closes that gap and gets down to the February 7th area, right around 122, 126. We'll be right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC. Dave David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It is better when we're together, and I like looking at those stars, but I'll bet you the stars are really pretty up in Bar Harbor, Maine. Let's go up to John in Bar Harbor. John, thanks for calling. Thanks for holding. How are you this morning?
Very well, Steve.
Excellent, excellent. You wanted to take a look at CEF. Is that the ticker symbol you wanted to look at?
Correct, thanks.
That is Central, what is that? Central?
That's Central Fund Canada.
Ah, okay, all right. So tell me what you're doing and how I can best be of service to you.
Well, you know, at some point here, I would like to, was lucky enough to get out of a lot of the gold and silver.
Yes.
And I just would like to start to establish where I think a potential buy point would be. And your abilities surpass mine, so I thought I'd ask you.
Well, okay, so let's take a look at that, and thanks for those kind comments. We'll see. I'm glad that if you were in this equity, I am sure glad that you got out. And as we take a look at it, this thing still wants to push lower right now, trading at 1385. It had its most recent gap down was on June the 20th, and it moved down with 5 million shares out here. So I think what we really need to do is take a look at a longer-term chart of this equity to get an idea of where it is headed to. But here's the key. We're going to go take a look at some potential areas And what you want to do on something that's been trading down like this is you want to do at least a couple things. Number one, you want to wait for a sign of strength before you even consider getting back into this equity. So if you track this, you want to make sure that you wait for a sign of strength. And a sign of strength is going to be a wide price spread and accelerated volume. It'll probably be a gap up versus, the gap down. And then what you want to do is you want to wait for the market. Then you want to be patient, and you want to wait and watch how the market pulls back on its first retracement of this equity here. If we take a look at the weekly chart, on the weekly chart right now, you can see you're trading at 1384. And all I'm doing, John, is just taking the crosshair and going over to the left-hand side of my screen to then identify a high volume bar and see that you're trading well underneath it, because that level should have acted as support, and that happened to be the May 14, 2010 time frame. You're trading below that. That low was 1481. The actual small swing point just on the next weekly session, which was the week ended May 21st, it's trading below that. So its next area where it's going to really release any information to you is as it moves into the swing point from February 5th, 2010. So that price level that you're going to be watching is 1220 to 1340. Now, on a weekly basis, which is where I think you should be watching this, 8.6 million shares is at that level. To give you an idea, last week this was coming back with 8.8 million shares, so still coming back into a swing point. Even though it's about similar volume, it's still too much. You really want to see it lighten up as it comes into a swing point. If we take a look at A to B equals CD down patterns, the A point on this is back on August the 26th. Your B point was August 26th, I should say, of 2011. Your B point on this is going to be December 30th, 2011. Your C point looks like it was right up here on March the 2nd. What it's also done on a weekly basis, it has surpassed the 1 to 1.272 area. That really sets up a move to the 1160 area, which would be your 1 to 1.618 retracement. I'm sorry, your 1 to 1.618 expansion on your A to B equals CD down. And if we take a look at coming all the way back here into the 2008 time frame, October of 2008, that was the lows that we're looking at all the way up to the high. You can also see that you're below the 0.618 level. So the answer to your question, $11.64 is the target range of where this is headed to. But do not step into this equity until it gives you a big sign of strength. All right, John?
I appreciate your time.
You bet. Thanks so much for calling, and have a great Tuesday. Folks, stay tuned. The Money Masters Show will be up next. The Dow's up 64 right now. Make sure you have a terrific Tuesday. And if you're out to start your day, I'll see you in the morning. Take care.
Yeah, it's always better when we're together.
Hi, folks. I'm Steve Rhodes with TFNN.com, and the trend is your friend until it changes. A free special report is now available on the homepage of TFNN.com, and if you have money in the markets, this free report is a must. If your strategy is buy and hold, this report is a must. If you're a day trader, a swing trader, a Forex or options trader, or just getting into the markets, this report is a must. And it's the second best gift you'll ever receive. Look, if you buy a stock and the general market is trending in the other direction, you've reduced your odds of buying at the right time by 70%. Instead, let me teach you how to get that 70% Advantage Plus. The Plus is a free trial to my daily newsletter service, Mastering Probability. There's no upfront deposit, no charge to your credit card, and I compress decades of education into each daily newsletter. This is a limited time offer, so act now, and I'll teach you how to take the trend and turn it into your best friend. All the details are on the homepage of TFNN.com. Act now.